Welcome to Investing Insight, where finance becomes simple and practical. Stock Market Terms, Part 3, Financial Ratios Every Investor Should Know. In this video, you'll learn how investors measure the strength of a company using key financial ratios and performance metrics. These are the numbers that tell you whether a business is healthy, profitable, or carrying too much risk. Let's start with market capitalization, or market cap. It's the total value of a company's shares, calculated by multiplying the share price by the number of shares outstanding. Large cap companies tend to be stable, while small caps often have higher growth potential but more risk. The price-to-earnings ratio, or P/E ratio, shows how much investors are willing to pay for $1 of earnings. A high P/E can mean high expectations for growth, or that the stock is overpriced. A low P/E may indicate a bargain, or a company in trouble. Earnings per share, or EPS, tells you how much profit each share represents. It's calculated by dividing net income by the number of outstanding shares. Rising EPS usually signals improving profitability. The price-to-book ratio, or P/B ratio, compares a company's market value to its book value, what the company would be worth if all its assets were sold and debts paid. A low P/B might mean the stock is undervalued compared with its assets. Return on equity, or ROE, measures how efficiently management uses shareholders' money to generate profits. Higher ROE usually means a company is using its capital well. Debt-to-equity ratio, or D/E, shows how much a company relies on borrowing compared with its own funds. A high ratio means more leverage and higher financial risk. Revenue represents total money earned from sales. Net income is what's left after subtracting all expenses, taxes, and interest. Together, they show how effectively a business converts sales into profit. Profit margin expresses how much profit the company keeps from each dollar of revenue. A higher margin often means stronger pricing power or lower costs. Earnings growth rate shows how quickly profits are increasing year over year. Sustained growth often attracts long-term investors. Finally, dividend yield measures how much annual income you receive from dividends compared with the stock price. It's a key metric for income-focused investors. These financial ratios and metrics are the language analysts use to judge value and performance. They turn company reports into clear insights you can act on. In the next video, we'll look at technical analysis, how investors read charts, trends, and price movements to time their decisions. If you found this helpful, hit like, subscribe, and follow Investing Insight for more clear, practical lessons on finance and investing.